May profits be upon you. We're going to go over New Zealand dollar, US dollar, NZD, USD. All right, first let's take a look at the RT money meter. All right, the RT money meter tracks the rate of change of each individual currency future over a 15-week period. And I update this every week. Last week, US dollar was ranked number one at 395. This week, it is ranked number one again at 379. The marginal difference, it's been moving sideways, right? NZD, on the other hand, is one of the weaker ones this week. It ranked at number 7 at minus 520. It was minus 197 last week. The key thing to look at here is that number because it's trending down. It is not only one of the weakest, but is actually getting weaker. We have momentum going in the other way. So that is one of the perfect weak ones to put against a strong one like the US dollar, right? Let's look at the daily. We don't have to do a whole lot of analysis on this if I can find something to write with, all right? All we see is price from the swing high from February of 2021 making lower lows. Look at the swing points, the lowest points. Making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And where we just took the liquidity from that low just this Friday, actually. Friday took that low. Okay, so it's very bearish. We're looking for sales, but the high probability trades are with the trend, and that would be sells in this case. Let's look at the 4 hour so we can take a look at. Let me make note that we are in the extreme of a monthly demand zone, and we're in the weekly a weekly demand zone, but it's nested within the monthly. Okay, and you see how we took that low. So what am I looking for? I'm looking for some opportunities on the 4 hour. Hold on, let me switch that out. All right, on the 4 hour, we have some POIs. All right, you see the break of market structure here. So we're bearish here. We make a lower high and then a lower low, breaking this low, right? So we are still bearish. And we are now in this leg of structure, this bearish leg of structure. And it has its own trading range, right? From the top to the bottom here, right? And what do we want? We want to take shorts from premium price of this trading range here, all right? Not from discount. Price has ventured into the above the 50, the EQ of this trading range, right? We got to get above 50%. What I like is like around the golden ratio, 618. If you're using your Fibonacci rotation tool, 618, 703, or 786, 705, excuse me, and 786. All right. So as price pushed up into here, is the pullback over? I don't know. What we do see is evidence that there is this bearish leg of structure has decided to change direction because it changed character here. Once it made these lows, low, low, pullback, low, and then we broke that pullback, and then we went even higher and broke this pullback. All right, trading above the low that established the new lower low. Before this was the highest point once this low was taken, right? So when price trades back above there, we are in the area that we want to be taking shorts from, right? Here's the deal. I'm looking at this price action here, right? And it's efficient, meaning that it didn't leave any imbalances. So price is efficient up to this point. price could come back here. If price pulls back, I would think I'm thinking that it'll probably reach this point. It could stop here, all right? But this is so close to this supply zone that I believe it is inducement to get people to take shorts early, only to have price come back and take out their stop losses and take them out of the trade and mitigate this zone and then come on down. All right. I do believe price will continue down further. Yes. All right. But there is a chance that price comes back here because after every break of market structure, after every time it takes liquidity, you can expect some kind of pullback. All right. And in this case, I'm looking at price breaking these pullback highs and returning to the source, the origin of that impulse. So I will be looking on the 15-minute time frame. Should price come back, and I'm pretty sure it will. All right, should price venture forth back here as soon as it hits this this demand zone here, I will be looking for 15-minute confirmations that price is going to go up. And if it does, I'm pretty sure it's going to take out this high, and we can take a high probability trade to the downside from up here. Now, that is the best case scenario. The bearish one is if price opens on Sunday and it just continues down bearish because it's already come into the 50%, all right, and doesn't need to go any further. All right, maybe that might be the case. And if it does do that and takes out this demand zone, this is what I need to see. I need to see price react to it, not go much higher, make people think that the people who took buys here, make them think that it's going into profit, and then comes back down and takes out the zone. The supply zone that is left up here, I'm waiting for price to come back up here so I can take a high probability pro trend trade to the downside. You understand? All right. I need to see demand fail before I can take shorts. The same way I need to see supply zones fail, boom, before I can take longs. I'm looking for the flip zones. Okay. So that's it. That's it. All right. I hope that you enjoyed this video. Do smash that like button, would you please, because it helps the YouTube algorithm. All right. Subscribe to my channel. Tell a friend. All right. Spread the word, would you please? And make sure that you leave some feedback, leave a comment. Let me know that you put somebody else on so I can shout you out, or I can see you down at Lions Den FX, which has free, no charge to join our premium Discord right now. You heard me, folks. Meet me down at Lions Den FX. All right. The link is in the description. Join the Telegram and then DM Drunken Monkey. Shout out to Drunken Monkey. DM him once you get in the Telegram and tell him I want in that premium Discord. All right. I will see you in the next video. Thank you for watching.